I'm Alan Kenny, Editorial Director with REIT.com, and we're in New York for REITWeek 2015, NAREIT's Investor Forum. Joining me is Glenn Mueller, University of Denver professor and real estate investment strategist with Dividend Capital. So, Glenn, give us an idea, where do you think we are right now in the real estate market cycle?
Okay, so my market cycle research looks at occupancy and rents. And if you will, we have kind of come through recovery, just like the economy, and have moved into the growth phase in the majority of markets around the United States in all 5 of the major property types. So really, coming into the strong growth period, if you will, of the cycle, out of recovery, not in all markets, but most, and actually kind of heading towards a peak in apartments, but still headed towards a peak in all the other 4 major property types.
What does that mean for REITs?
Well, that means that NOI and FFO growth for REITs should be very strong in the next few years as the economy continues to expand. We see a lot of demand from increasing employment. The employment numbers have finally gotten above 250,000 a month, which is where we need for an expanding economy. And of course, we still have a restricted amount of new supply going up in all the different property sectors, again, except for apartments, where we are building a lot of new apartments.
Okay, so then where do you see the risks and the opportunities in the REIT market today?
Well, I think that let's start with the positives. The opportunities are that most REITs should be able to capitalize on both increasing occupancies and increasing rents to improve their NOI. The major challenge or risk, I think, is that the world sees U.S. real estate as a very safe place to be, and so we're seeing a lot of foreign capital come in to buy properties. So prices have increased substantially, therefore buying at lower cap rates makes getting a good return off of new acquisitions more difficult and more challenging for the REIT world today. So many REITs have obviously turned to development where they can get a higher return off of developing new properties, which also means they have a property that's more competitive, going into the future. So that is good. Should something happen, should there be a black swan event that turns the economy down, that's when properties that you're developing that you hope to come out, finishing them, coming out, and being able to lease them up quickly would get hurt. So that's, I think, the one risk is the black swan event that turns us into the next recession. But right now, at least all the economists I read say that's somewhere between 2, 4, or 6 years down the road. So the big guess is how long we keep going.
Thank you so much for your time, Glenn.
Thank you.
And for more on this and other REIT news and analysis, be sure to visit REIT.com.